I get it. Most of us want to start investing, but you feel like you have to learn a lot. And also there are so many investment opportunities. You have the stock market, you have government securities, you have fixed deposits, you have mutual funds, you have real estate, and all these things can easily overwhelm a beginner investor, right? So today in this video, I'm going to share one of the best investment opportunities that a beginner can immediately start investing. In fact, I think this is one of the best investment opportunities for a beginner to start just like that. So what am I talking about? Well, I'm talking about unit trusts. Unit trusts are also known as mutual funds. Now, if you have no idea what a unit trust is and how you can invest and make money in a unit trust, in this video, you are going to learn everything you need to know about unit trust or mutual funds. Before getting to the good stuff, if you are new to this channel, my name is Nishan. I'm the founder of Jump.lk. It's a website that's helping Sri Lankans to start their own businesses, learn about personal finance and investing, and ultimately create a great life. So consider subscribing to our channel. Now to the good stuff. So what is a unit trust? Imagine there's an asset that usually you can't buy on your own. Why? Maybe because you don't have access, or else because it requires a lot of money. Now what can you do? You can get together with a bunch of friends and create a fund, right? You can ask them to pool in different amounts. You can invest 1,000 rupees, one can invest 1,000,000, and you are going to create a fund. And with this fund, now that you have a lot of money, you have access to investment opportunities that you didn't have access as an individual. So that's essentially what a unit trust is. Instead of a bunch of your friends, there's going to be thousands of investors just like you and me who are putting in their money to a thing called a unit trust. This is essentially a fund, and fund management companies use this money to invest in different assets. That's what a unit trust is. These are also known as mutual funds in Sri Lanka. So how does a unit trust work? Well, there are fund management companies who manage unit trusts. So what they are doing is they are collecting money from thousands of individuals and companies just like you and me, and they create funds, and they are going to use that fund to invest in different assets. Now these assets can be the stock market, they can be government securities like treasury bills and treasury bonds, these can be fixed deposits, these can be commercial paper, these things can be repurchase agreements. So what these fund management companies are going to do is they are going to use the money that you and I invest to acquire different assets through this fund. That's what a unit trust is. So why do people call these unit trusts? Well, investing in a unit trust is different to investing money in a fixed deposit or a bank deposit, a usual savings account. When you are investing money in a unit trust, you are essentially buying units from that fund. So for an example, if you are investing 1,000 rupees in a unit trust, and if the unit price of that fund is 20 rupees, you are going to get 50 units from that fund. That's how it works. So how can you make money by investing in unit trusts? Well, what happens is fund management companies are going to invest your money in different assets. Like I told you, these can be the stock market, fixed deposits, government securities, and there are so many other assets that they invest your money in. So over time, the value of the assets that the fund is investing will increase, and with that, the value of the fund will also increase. Because of that, the price of a unit will also increase. Get it? So that's how you are going to make money. So if you bought a unit for 20 rupees in the beginning of the year, and after the first year, if the value or the price of the unit has increased to 25 rupees, that means you have earned 5 rupees for every unit that you bought. Now, when most of these fund management companies, when they promote and advertise their unit trust, what they say is you are going to get a 10% return or a 13% interest rate. That's what they say. But actually, you are not going to get an interest rate like saving money in a bank when you are investing in a unit trust. What happens is, over a period of a time, the value of a unit will increase. So if you buy a unit for 20 rupees, and after the first year, if the value increases or the price of a unit increases to 25 rupees, that means you have made 5 rupees from a unit, right? That percentage amount, that's what these companies are talking about when they are promoting, saying that investors get 10% or 14% when you invest your money in a unit trust. So why do these fund management companies tell you that you are going to get an interest rate of 10% or 14% instead of talking about unit? Why? Because they are competing with savings accounts and fixed deposits. What they are trying to say is, instead of saving your money in a usual bank account or a fixed deposit, come and invest in a unit trust where you are going to get a higher return. Actually, what happens is the value of a unit, or the value or the price of a unit, is going to increase over a time. Now, when you are going to invest in a unit trust, this can be a bit confusing. Why? Because there are so many fund management companies, and under each of these fund management companies, there are different fund types as well. So you need to understand what those funds are and what types of funds are available for investing. Now, if you look at the big picture, unit trust can be broadly divided into two segments. One is open-ended funds and the other one is closed-ended funds. First, let's talk about what an open-ended fund is. In an open-ended fund, investors can enter and exit whenever they want. The amount of units that a fund can issue is not restricted in an open-ended fund, right? So as long as there's money and there's investors like you and me to invest in an open-ended fund, they can issue any number of shares. And also, there's no maturity period in an open-ended fund. It's going to continue as long as the fund management company continues the fund. So anytime someone can join an open-ended fund, and anytime they can leave a fund as well. There's no restriction whatsoever. That's what an open-ended fund is. In a closed-end fund, you can't exit and enter whenever you want. The fund offers you a time to buy units, and after that they are going to close the fund. After that, you can't withdraw the money that you invested until the fund reaches to the maturity, right? So that's how a closed-ended fund works. You can't enter and exit whenever you want. You have to wait until the fund matures. The two main categories that are available, you have open-ended funds as well as closed-ended funds. So based on this classification, there are so many fund types with different attributes and different variables. So let's look at each of them one at a time. The first fund type is gilt-edged funds. Now, these funds only invest in government securities like, treasury bills and treasury bonds. Usually, the risk is super low in these funds. Why? Because they invest in government securities, but the rate of return or the amount that you will earn will also be low. Right, next let's talk about income funds, also known as high-yield funds. These funds usually invest in fixed income securities which are offering a higher rate of return. Most of the time, these are corporate debt securities. So if you are looking for a higher rate of return, you can choose income funds or high yield funds, right? So the next fund type is growth funds. Now these funds mostly or predominantly invest only in the share market, right? So the objective is to provide a capital appreciation over a long period of a time. So since these funds are investing in the stock market, there's a high risk, but at the same time there's a high return as well. So if you're looking for a higher rate of return over a long period of a time, you can look at growth funds, but keep in mind that there's a high risk involved in growth funds as well. So the next fund type is called index funds. Now what are these? Well, these funds only invest in the stock market, and they invest based on the proportion of the market capitalization in a price index. Now if you didn't understand what I meant, it's simply this: if the entire market increases by 12%, that means the value of your fund will also increase by 12%, and if the market drops by 20%, that means the value of your fund will also drop by 20%, right? And that's what an index fund is. Next, let's talk about money market funds. Now these funds are super famous among investors. Why? Because these funds are great to earn a higher rate of return in a short term. Most of the time, money market funds invest in short term fixed income securities like treasury bills, commercial paper and repurchase agreement. And the best part is you can earn a higher rate of return within a short period of time. So individuals as well as companies, they park their excess cash in money market funds to earn a quick return. So if you are looking for a higher rate of return in a short period of a time, money market funds are great. Also, money market funds are very flexible, so you can enter and exit whenever you want. Right, the final fund type is called sector funds. Now these funds also invest in the Colombo Stock Exchange, but they invest only in a sector. For an example, let's say you want to invest your money in the banking sector. Then you can find a fund or a unit trust fund that only invests in the banking sector in Sri Lanka. So that's the idea of a sector fund. So what's the big deal about investing in unit trusts? Well, to understand that, you need to understand the benefits of investing your money in a unit trust. Let's get right to that. First is diversification. Now, even if you are investing your money in a single fund, most of these funds invest their money in different assets. These can be government securities, these can be fixed deposits, these can be the share market. So automatically, whatever the money that you invest will be diversified among different assets. That's the best part of investing in unit trust. Even though you invest in a single fund, your money will automatically be diversified among different assets. The next benefit is higher rate of return. Now, when you are comparing unit trust versus bank deposits, most of the time you are going to get a higher rate of return in a unit trust. Unit trusts are also great to beat the inflation in the country. So if you are comparing your investments between a fixed deposit versus a unit trust, most of the time you will be better off with a unit trust because of the higher rate of return that they offer. The next benefit is no hard work for you. You don't have to analyze, you don't have to look at the economy, you don't have to look at the share market, you don't have to do any of those things to invest money in a unit trust. Why? Because the fund managers, fund management companies, they have their internal research departments and they are going to do the analyzing part for you. All you have to do is find a fund that has performed well in the past and invest your money. So you don't have to do any of the hard work, the analyzing, the calculating, any of that. All that will be taken care for you by the fund management company. So no hard work for you. The next benefit is you don't need millions to start investing in unit trusts. Now with unit trusts, you get access to investment opportunities that usually an individual like you and me will not have access to. Right? So that's the best part. You don't have to have millions to start investing. You can start investing with an amount like 1,000 rupees or even 2,000 rupees every month, and still you get the access to some of the best investment opportunities that usually only high net worth individuals or companies has access to, right? So that's the next benefit. You don't need millions to start investing. The next benefit is you can withdraw your money anytime. Now, when you are comparing unit trusts with fixed deposits, one of the disadvantages of fixed deposits is you have to wait until your fixed deposit matures. Now, it can be 3 months, 6 months, or even a year, right? But with unit trust, you can withdraw your money anytime you want, but keep in mind, this is only applicable for open-ended funds. But most of the time, you'll be able to withdraw your money within 1 to 2 days. So that's another advantage. You can withdraw your money anytime you want. The final advantage is unit trusts are tax-free. So for individual investors like you and me, most of the time, you're not going to pay any taxes for the return that you earn from unit trusts. On the other hand, for companies, if you are investing in unit trust, there is a tax, but for individuals, unit trusts are tax-free. That's another advantage. So the next big question is, how can you practically start investing in unit trust? Well guys, investing in unit trust is super simple. All you have to do is select a fund management company and meet them. Basically, they are going to allocate an account manager for you, and he or she will guide you on all the funds that are available. Most of the time, there's a minimum investment of about 5,000 rupees, but after that, you can invest any amount you want. You can invest 500 rupees or you can invest 1,000 rupees. Any amount is fine. So once you register with the fund management company, they are going to give you a bank account number where you'll have to send the amount that you want to invest. And once you send the amount, what you have to do is you have to inform your account manager to buy units for the amount that you credited to their bank account. It's simple as that. Alternatively, what you can do is you can set up a standing order so that each month a certain amount will automatically be credited to their bank account and it will be invested in the fund that you select. That's how I do it. I have set up a standing order so that I don't even have to worry about my investment. Withdrawing money is also super simple. All you have to do is email your account manager, and within 1 to 2 days, the amount will be credited to your bank account. Like in every investment, there are certain things that you need to consider before investing in unit trusts, right? So what are those things? First, you need to consider the fund management company and the different fund types that are available in the company. So where can you find all this information? Well, there's a website called Unit Trust Association of Sri Lanka. I'll add the link in the description below. They have all the details and all the companies listed there, including the different types of funds that are under each company. So what you need to do is, look at the companies that are available and look at the different fund types. Now, if you take any fund that is managed by any fund management company, you'll find a thing called the fact sheet. Now, this fact sheet has all the details about a fund. What is the type of this fund? What is the objective of this fund? Where does the fund invest their money in? What are the assets that the fund invests their money in? What are the ratings that different rating companies that have given to these funds? What is the price of a unit? The historic performance? All the details that you need to understand about a certain fund will be included in this fund fact sheet. So what you have to do is, once you select a fund management company, the next thing you need to do is check out their different fund types and look at their fact sheets. You'll find all the information that you need in a fact sheet. The next thing you need to look at is the historic performance. Now, when you are comparing different funds among different companies, the best indicator is to check out the historic performance. How has this fund performed over the last year as well as the last 5 to 10 years? All that information is there in the fact sheet as well as in the Unit Trust Association of Sri Lanka website, where there's a specific segment called performance reports. If you check out the performance reports, you'll find all the funds that are available in Sri Lanka as well as how these funds have performed over the past years. So historic performance is something that you need to definitely check before investing your money in a unit trust. The next thing you need to look at is management fee. Now, most of these funds, they have a management fee. That management fee is charged by the fund managing company. So you need to know how much they are charging. Usually this is going to be a percentage. So according to the industry recommendation, find a fund that has a management fee which is less than 1.5%. Right? That's the recommended management fee according to so many financial experts. Next, you need to look at other fees as well. There are certain funds that has a exit fee, right? If it is a closed-ended fund, there's going to be an exit fee, so you need to consider that as well. All this information can be found in the fact sheet, and also talk to your account manager, talk to your fund management company and get this information before investing your money. So those are the things that you need to consider before investing or selecting a unit trust. Right, so that's the end of this video. Now you have learned everything that you need to know before investing in unit trust. Now, if you want to learn more about personal finance and investing, go check out Jump.lk, where we have in-depth guides on everything you need to know about practical investing in Sri Lanka. Also, I conduct a once-a-month workshop called How to Invest and Make Money. If you are struggling to manage your money, and if you are feeling overwhelmed, and if you have no idea where to save and where to invest your money in, come and join our workshop. It's happening every month. You can join the waiting list by clicking the link in the description below. Now, if you haven't subscribed to our channel, hit that subscribe button, because we are going to share videos just like this every week in the future. And also, if you have any questions related to personal finance, investing and money, add a comment below and let me know, so that I'll do a video just like this. And until our next video, keep crushing it.